Welcome to the Day Hagan Catastrophic Stop Update for March 31st, 2025. Today, we'll unpack why our model's holding steady despite the recent correction and what it means for markets. Our catastrophic stop model dropped to 51.4% from 56.4% last week. This was due to our high yield and emerging market bond breadth factor shifting from bullish to neutral on March 26th. Technical signals like U.S. stock, bond relative strength, and widening high-yield credit spreads are now bearish. Conversely, global equity breadth, investor sentiment, and volume-adjusted equity demand are bullish. The weight of evidence suggests this dip won't spiral into a major downtrend unless our model flips negative, triggering a cash raise. Turning to some individual indicators, we note that for the short term, the S&P 500's 10-day rate of change hit oversold levels, denoted by the indicator declining below its 5-month lower standard deviation band. Our current view is that the SPX holding 5,500 is key to the market finding support. Intermediate-term measures then need to stabilize to confirm. Sentiment's another bright spot. CNN's fear-greed composite shows excessive pessimism, a bullish contrarian sign. A move back above 40 would signal a positive reversal. While pessimism reigns, smart money confidence is spiking higher, which has historically been a useful marker for spotting potential market lows. Levels echo 2020 and are even more bullish than during the August 2024's low. Earnings, though, are in focus as Q1 ends, and there is quite a bit of uncertainty. FactSet reports 64% of S&P 500 firms with guidance issued negative outlooks, above average. However, historical precedents currently suggest that earnings trends are more in line with non-recessionary dips at this point. If earnings tank, recession odds rise and we will reduce exposure in response. Uncertainty is dragging earnings down, fueled by unclear government policies. The Economic Policy Uncertainty Index has climbed to historically high levels. Historical analysis shows that in 10% corrections, rising uncertainty often deepens declines. High uncertainty levels are not just present in the U.S. The average of 20 of our largest trading partners show similar ambiguity. Clarity could lift equities. Offsetting this, economic liquidity via M2 growth is constructive. The St. Louis Fed Financial Stress Index flags below average risk. And S&P 500 3-month volatility isn't spiking. Hard data is calmer than the headlines. April 2nd looms with tariff talks, and Friday's jobs report will test economic momentum. Seasonality could help, but earnings guidance will steer the ship. For now, our model keeps us invested, trimming high beta sectors for defensives to lower volatility. Bottom line, the secular uptrend holds, but we're vigilant. Our quantitative approach balances risk and reward objectively. Visit dayhagan.com or call 941-330-1702 for more. This material is for educational purposes only. Further distribution is prohibited without prior permission. Please see the information on disclosures and fact sheets here. https://dhffunds.com/literature. Charts with models and return information use indices for performance testing to extend the model histories, and they should be considered hypothetical. All rights reserved. C. Copyright 2025, Day Hagan Asset Management. Disclosure. The data and analysis contained herein are provided as is and without warranty of any kind, either express or implied. Day Hagan Asset Management, any of its affiliates or employees, or any third-party data provider shall not have any liability for any loss sustained by anyone who has relied on the information contained in any Day Hagan Asset Management literature or marketing materials. All opinions expressed herein are subject to change without notice, and you should always obtain current information and perform due diligence before investing. Day Hagan Asset Management accounts that Day Hagan Asset Management or its affiliate companies manage, or their respective shareholders, directors, officers, and/or employees, may have long or short positions in the securities discussed herein and may purchase or sell such securities without notice. Day Hagan Asset Management uses and has historically used various methods to evaluate investments which, at times, produce contradictory recommendations with respect to the same securities. The performance of Day Hagan Asset Management's past recommendations and model results is not a guarantee of future results. The securities mentioned in this document may not be eligible for sale in some states or countries nor be suitable for all types of investors. Their value and income they produce may fluctuate and/or be adversely affected by exchange rates, interest rates, or other factors. Hagan Asset Management 1000 S Tamiami Trail, Sarasota, FL 34236, toll-free 800-594-7930, office phone 941-330-02, websites https://dayhagan.com or https://dhffunds.com.